And welcome out to our halftime report here, Thursday, 7/2/2020, second day of July, and the last trading day of the week. Markets are closed tomorrow. And it is your host, Coach Tim Justice here. And we've got our regular panel here with us today. We've got Matt, we've got Mark, and we've got Cody to break down the jobs information, the action on the last day of the week here. It's been a good, strong, bullish week for markets. I mean, really, we went down and we tested support. The conversations early in the week were, can we hold support? Is support going to hold? Well, it did, at least for a 4-day rally here for the equity markets going back up into the end of the week. We're going to break down the jobs information that came out this morning, giving a boost to the market a little bit. Quick update on what's going on with lockdowns or closures with COVID, and some interesting stories out of Apple and McDonald's, kind of anecdotally with that. We're going to get Mark's take on that. The PPP loan program was extended through the month of July, and we're going to have a quick discussion on whether or not we're going to see more fiscal stimulus getting passed in July. Apple, Tesla, American Airlines, Facebook, Spotify, and more here today as we break down the markets. Let's get right into it. And before we get started here, Matt, actually, I do want to do a quick kind of discussion about last night's webinar, which I thoroughly enjoyed. You know, I was there kind of opening the room and hosting and introducing you, and then you taught the webinar that we do on Wednesday nights on the introduction to technical analysis and all those kind of things. By the way, if you've not seen, if you did see it, if you're there live or you saw the replay, and a lot of people have already seen that, Matt, congratulations. It was a fun time. I really thoroughly enjoyed it. I enjoyed the content. I enjoyed the students. I enjoyed the energy. Matt, talk about that webinar a little bit. How'd you feel about it?
You know, I did, Tim. I really enjoyed, hanging out with the crew last night, teaching the art of, support and resistance, and the triumphant return of Marty the Elephant. Made my heart just warm a little bit coming into the 4th of July. So I had a lot of fun. And the one thing I've realized in my career, when it comes to education specifically, not just, trading's a lot of rules. It's a lot of analytical. It's a lot of analysis and whatnot. Learning how to trade, you got to make it fun. You really do. And, I thought we had a lot of fun learning support and resistance. And, with Marty, Marty is a tool I use to, give analogies, right? Because I just feel like people have a really easy time not only learning through analogies and stories and creative ways of teaching people, but they remember it. They remember it far more than when you say the zone of support is 1/2 ATR underneath the finite level that you give it, versus, well, you see this tramp, and when Marty hits the tramp, do you see how it expands down? Well, that's kind of like the zone of support. That to me, people remember that far more than when you go through the analytical approach to teaching. Same concept with when I'm teaching like order entry. I pull up Marty the Elephant. I'm like, okay, listen, we're on support here, but we only want to buy Marty when Marty starts doing what? Well, Marty starts going up. Well, Marty's a big old elephant. He's been jumping for a long time, and we don't know if he's sleeping. So we're just going to wait for Marty to start jumping by putting an order right above Marty's head. And if Marty starts jumping, well, then we're going to get into the trade. Well, same thing with the stock. We don't want to buy the stock at the current price. We want to buy the stock with a buy stop order as the stock starts going up off the support level. So it's just a creative way that you can start teaching people, the concepts of these analytical approaches to the market. So I just feel like trading is analytical, yes, but learning how to trade, you gotta find creative methods, because people really don't learn through step-by-step approaches, even though that's what they might want, and they might crave that. Just give me the steps. Just give me the steps. Just give me the steps. But they don't remember the steps. That's what politicians do. Politicians give you the steps. I have a 7-point plan on how I'm going to cure racism in America. That's not how it works. That's not how it works. You have to have someone like Martin Luther King Jr. say, I have a dream. It's creative. People remember it. People get behind it. And so, I thought we had a lot of fun getting creative on learning the concepts of support and resistance. Really enjoyed the halftime crew there. Really enjoyed Team Tackle there. You guys are absolutely the best. It was a humbling experience to see all of tackle trading there, and well, not all of it, but a large contingent of tackle trading there, and obviously a lot of people watching it overnight. So it was a lot of fun.
If you have not seen the replay yet, obviously go back and do it. Give it a thumbs up. Give us our comments in and below, and maybe just say something nice about Marty. You know, Matt, you asked me, I mean, how did people receive Marty? Because you weren't really watching the chat, and I'm like, oh, they liked him all right, you know. But I was
You're a
completely
liar.
I was underselling.
You undersold that one, buddy.
I sure
I went and
did.
checked the tape. I checked the tape. I was not listening to your bias against Marty, your utter hatred against Marty. I went to the tape. I went to the evidence. The team loves Marty. You can never take that away.
You know, and one of the things we did at the end of the webinar is we also kind of explained our promotion that's going on right now. We're going to do that as well right here and continue to do it as long as it's going. The promotion goes until July 8th, Matt. And here at Tackle Trading, we have several things going on right now. Number one is our systems, you know, the Tackle 25, the Bear Market Survival Guide, the Cash Flow Condors. In fact, if you're a Team Tackle member, just put it in the chat. Systems are 50% off. Let the community out there know. If you've never enrolled in a premium course with Tackle Trading, you're going to love them. It's video-based content with a write-up and quizzes, an entire, you know, kind of course that you go through. We really put a lot of work into these courses. People who take them tend to really love them. The other thing that we're promoting right now, Matt, is our annual pro membership. So people who have, you know, maybe taken all the systems, they can still re-up their annual for $895, which is a discount, I think 23% on whether if you're just paying it month to month. So if you know you're going to be with Team Tackle for a long time, the annual is an easy call, in my personal opinion. Whenever I have products or services I use, Matt, that I know I'm going to keep, I look for annual discounts. You know, that's part of what I personally do, even just as a consumer or a user of different services. And if you've not enrolled in the STEP system course yet, which in my opinion is the best course we have, it's also on a bundle packaging. You can find all of that information on the store page at Tackle Trading, and make sure that if you have any questions about that, just email us at team@tackletrading.com. Let's get down to the analysis here, boys. 4 days, 4 green days. You know, we're up near, I guess, intraday resistance, Matt. I mean, if you look at the bodies of the candlesticks there, you're actually getting above that level. Break that chart down technically for me if you can.
Yeah, we talked about this level of resistance earlier on this week when you were really kind of looking at it from that 2125 level, 2130, all the way up to that 2150 level. And I basically said this one's a kind of a little bit of a tough trigger to really see that confirmation in terms of the debate between that 3130 and that 3150 level. Ultimately, I thought the evidence was pretty clear with the wicks up here at about 3150, and that's kind of what we tested here today. You know, upward movement in price coming off those moving averages, the continuation of the you know bullish movement that we started earlier this week with support holding, and now we're just showing a little bit of hesitation with that ultimate breakout to see this you know ultimately to see this trend continue would take that breakout of that intraday 3150 level. So, you know, positive market response here today off some economic news. We'll get into that here in just a second. But just, you know, a little bit of profit taking off that 3150 level from an intraday perspective. Nothing I would personally be concerned about. That's just a little bit of pullback, as you can see that profit taking as it approached above 3150. Quick profit taking right above that. Nothing to be concerned about. That is absolutely par for the course when you see profit taking intraday at ultimately a resistance level, especially coming into the weekend. We got a you know longer weekend, holiday weekend, 4th of July coming out this weekend. So a little bit of hesitation right there at that 3150 level. But, you know, ultimately, as I've said all week, if you're the bull in the market, you wanted to see this week. You wanted to see support hold. You wanted to see the fallawation coming into resistance. And hopefully for the bulls out there in the market, we see that continuation of the price coming into next week. And a lot of that was on some positive news coming out today. But let's see how that you know performs coming into next week. Right now, you got what you wanted from a bullish perspective this week.
That intraday chart was really impressive. Go back to that for just a second, Matt. That 30-minute chart, I saw that trend line, and what a beautiful just run here for the week. There's no question about it. 5, 15, 30, they're all kind of the same. Really just holding those pivot points, holding the momentum all week long. You had a couple of moments of intraday price selling, but it has been a winner for the bulls. Marky, how do you interpret the price action this week? Go ahead, Matt.
Yeah, I just want just one thing to the trend line here on the intraday perspective coming into that 3150 breakout. Obviously you took a little bit of profit as you were going through that. But one thing, and thank you for bringing up that trend line because it's an important concept. You do have a fairly standard 45-degree angle trend line which is really positive. But what you also see coming into today and really on, from the overnight action yesterday is you are starting to see a little bit of momentum pick up as you're coming into the holiday weekend on the intraday perspective. Real standard trend line coming into here. You see this upward movement in price. You see the momentum start to build coming into that resistance breakout. That's what you want to see coming into that breakout. A little bit of momentum coming in on that intraday trend.
Yeah. Yeah. Marky, how are you reading this price action? Obviously, that momentum is strong this week, 4 days in a row, like Matt has been breaking down here from a technical perspective. It's bringing it up into some levels. I'm sure that some technicians are going to say, okay, we've got to be concerned about this right here. NASDAQ, though, is actually breaking out into all-time highs. You're seeing certain strength in some areas of the market. Mark, what's your read on the price action so far?
I mean, it was pretty well known that 3150 level was going to be a resistance level. Resistance, it's not surprising at all to see a quick jerk back as that level was tested aggressively this morning. So, we're at the mercy of the news. It's one of those things when you're at a resistance level, especially in this market. What does 3 days hold, right? Give me a prophetic lens into the news. Do we get vaccine news? Do we get stimulus news? Do we get something positive over the weekend? Then you can easily see that level broken. If you don't, if you got something negative on the other hand, I mean, it's one of those things that many technicians, when you approach resistance, take profits. And then if it breaks resistance, you get a confirmation, they enter back in. That's pretty standard across the board. It's not going to work every time, right? If you knew the future, you'd have what would work every time. But that formula of taking some profits, re-entering if it breaks the resistance level, that will treat you well for the rest of your trading life if you do it each and every time.
A lot of the strength here this morning, guys, is being attributed to the jobs numbers that came out in the pre-market. There was two actual data points. We don't often get those two on the same day here. Matt, kind of break down that jobs data, because the monthly unemployment report, obviously a very key one throughout my entire career, through the history of markets, and will continue to be so. And these numbers last month were a huge head scratcher. Matt, what was your reaction to the jobs data this morning?
Well, I'll get into the jobs numbers here in a second. I do want to come back to the market very quickly. I kept coming back all week long saying, this is what you wanted from a bull. This is what you wanted from a bull. And the reason that I kept coming back to that saying, this is what you wanted from a bull is because you were coming into this week with a very, very, very important support test. You were testing that 3,000 level, the 200-day moving average, the previous pivot at 2970, the 50-day moving average right there. And if you did not hold that level, you're ultimately turning into a short-term bear, ultimately, because now you have a lower high. You're now violating support. You're underneath all of your moving averages. That's why it was so important this week. And nobody knows exactly what the future holds, but that's why it was so important this week for that support level to hold. Because now, worst case scenario, even if resistance at 3150 holds, you're in some type of short-term consolidation pattern looking for a potential breakout, which means all of your technical patterns in the market have some degree of consistency to it. If that support level would have been violated, all of a sudden those high bases that we were seeing this week that were really, really, really powerful this week, those technical patterns would have been blown up, very similar to what, and to understand what I'm talking about, all you have to do is look at Facebook. When you have that violation of support, all of a sudden every technical setup you're looking at to trigger above gets absolutely blown out of the water. With that support level holding, all of a sudden stocks like Billy continue on that breakout. All of a sudden, a stock like Tesla continues that breakout. And so that support level holding this week was so vitally important for these momentum plays, those breakouts that we were coming into the week saying, you know what, we like the momentum of the breakouts this week. The distressed areas of the market we're a little bit concerned about. With that level, with those support levels holding, all of those momentum plays held their patterns, held their breakouts. It was a very powerful support bounce this week. The one thing that is a little concerning to me, obviously, is we have not broken up above that 3150 level like the NASDAQ. The NASDAQ is it's a juggernaut, just an absolute juggernaut right now.
Mm-hmm.
But holding that was so vital for the market this week, in my opinion. As for the jobs number this week, you know what? I'm having a hard time processing the labor market, and I don't say that jokingly. I really don't, because I'm looking at these labor numbers coming out of the labor market the last 2 months, and it just, the math does not make sense. It really doesn't. You cannot make sense of the initial claims that we are seeing, the government response we're seeing, the central bank response we're seeing, with the labor market now at 11%, with adding 4 million jobs to the in the month of June. So it was the job numbers itself really positive when you just look at the numbers. It came in at 4.8 million jobs. Expected was 3.03 million. Last month was 2.7. The unemployment rate fell to 11.1%. The expectation was 12.4%. Last month was 3.3%. Average hourly earnings actually decreased by 1.2%, which is, kind of par for the course with what we're seeing in this environment. But I'm having a very difficult time, because I want the labor market numbers to be good. I do. I think everybody does. We would rather see a bull market. I said this, I got on a soapbox earlier this week saying we all want this market to get better. We all want this economy to get better. But it's really hard for me to really, wrap my mind around what the labor market is actually looking at here. And so there's just a disconnect right now, and understandably so. It's a really, really difficult environment for these purchasing managers to say, well, we have these amount of people on the books, but we have these amount of people furloughed. Are we counting them? It's a very difficult thing. So I'm not trying to say that the labor market numbers are being manipulated. That I'm not there yet. I'm not there. I just think it's a really, really, really difficult job for these managers, because the unemployment rate is a survey report. It
Mm-hmm.
is not. It's not a inflationary report where it's just mathematics. It's a survey out there, and I can see it being very, very, very difficult for this survey to find accurate data, given that just the depth of the difficulty in assessing what the true weakness or the true strength of the labor market is.
Marky, this is a conversation you and I and Matt have been having for obviously a couple of months now here on the halftime show and whatnot. I mean, how do you unpack the labor market data? Because I'm with Matt. It's really hard for me to wrap my head around what's going on here. Mark, what do you think's happening?
Well, I mean, survey data can be easily manipulated, misinterpreted, and it's survey data, right? How many people, when a poll comes out in an election that says that they don't like, say, hey, you can't trust the polls. You hear that all the time. I think that jobless claims is a much more accurate representation. The jobless claims report that comes out every Thursday shows a stagnating labor. While Matt's not ready to go there, the Fed came out last month, Fed speakers, and said last month's unemployment report was not a true reflection of the unemployment situation. The BLS itself is saying, hey, we keep having this error. So I don't have to go full conspiracy theory. All I have to do is point to actual individuals or organizations that says, yeah, this data probably isn't a true reflection of the economy. Just point to them. But hey, it's great to be part of the team, right? It's one of the things, like, the team will continually do what it has to do to prop up the market.
And I think almost everybody in the market would have a very similar take. Well, not everybody, the stock pushers on CNBC, but outside of mainstream media pushing certain agendas and whatnot, I do believe it's very difficult in this economic environment to get an accurate representation of what the true weakness or the true strength in the labor market is. So is it being manipulated politically, or is it just very, very difficult, a very difficult survey to get your mind around in this economic environment where we're dealing with unprecedented type labor market. We're dealing with an unprecedented response from from a fiscal policy and a monetary policy to attack this economically. So, all I'm saying, I agree with Mark that I don't trust the data coming out of the labor market right now. Is it manipulation, or is it just a very difficult economic moment in time? That's where I'm at. I just think it's very, very difficult for this report to get it accurate right now. And I think it's going to be months and months and months before we actually see, where the labor market really is.
One thing that
Now,
seems to be
I will tell you, there's no way I believe in an 11% unemployment report right now. No, there's no chance I believe that that's an actual representation of the labor market right now.
no, the labor market's distressed. There's no question about it. I mean, how many millions of Americans are out of work or underemployed
I'll
right
give you
now?
the number too.
Yeah.
47.8.
Is that underemployed, out of work completely?
That's out of work.
Yeah.
There's 52% of the actual people in America have a job right now.
Mm-hmm.
That is a record number. That is a record number, and that does not correlate to an 11% unemployment report. It just, the math does not make sense. You cannot make this math make sense. You can't.
Yeah, and obviously, I think anybody with 2 cents obviously would kind of question some of the data. But here's the thing: the market doesn't seem to care. The market actually buys up most of these reports on a weekly basis. They did it last month. They've done it for about 6 weeks in a row. In fact, longer, probably 10 weeks in a row. They've been buying up bad economic data, especially around the jobs.
Well, they were, and they are, but the market was front running coming into that report, though. I mean, when you're looking at the overnight data here, here's the Asian markets, here's the European markets. The market's running in front of that economic data. Here's the unemployment report right here, and yeah, it did have a nice little hour and a half bump. But what happens after that? It comes right back down on the cash open. And so for me, if the market truly did believe that number, you would have saw the continuation of that momentum you had coming out of the report. You didn't. You had a little bit of a short-term bump, and where did it hit? Ultimately, that intraday resistance tested above 3150, hit 3156, came right back down. So I think if the market truly did believe that number, they would be running this number like the European and the Asian markets did. They didn't. They sold it on the cash open. Maybe it's a little bit of concern coming into the weekend. Maybe it's a long weekend. Maybe Wall Street is just saying, hey, I just want to take a break. I just want to go to the my 4th of July holiday, or whatever the case might be. So yeah, I mean, the market did buy it up, but it gave it right back literally an hour and a half later.
Mm-hmm. Well, it's been, back and forth there over the last few hours, but for the week, man, we are still very strong. I mean, how it closes, obviously, we're going to be paying attention. That might affect our rankings. Matt, doesn't this, it's got to warrant some kind of discussion about at least a slight upgrade on the broad market. You have 4 strong days here holding support, don't you think?
Yeah, I do think you'll see an upgrade on the market with support being held this week with the 4-day price appreciation. It's not, volume. You could be a little concerned on the broad market, i.e. the S&P 500, with a little bit of a decrease in volume here this week on this support bounce and the price appreciation. But that's nothing that is abnormal when you have this type of consolidation. What I'm really looking at is, do we see an increase in this volume here as we break out of 3150 if we do get that on Monday?
Mm-hmm, mm-hmm. Let's flash through a few of the commodities here, Matt. There's not much in the charts, and I think we can get through them pretty quick, kind of update the team on where we are. Let's start with crude oil if we can. Crude light just kind of hanging around that $40 mark. Mark, you're going to be doing your end of week. Usually you do this on Fridays at 2:30 Eastern, but you'll do it today because the markets are closed tomorrow, right after this halftime show at 2:30 Eastern, where you update the team on kind of what you're watching, commodity perspective, market perspective. How are you reading crude oil right now, Mark? Kind of sitting right there on that 40 handle. We'll get the technical read in a second, but first you, Mark.
Well, I mean, I think the technical read is the only thing you can go on right now. The things are very neutral from a sentiment standpoint. The higher price goes, they're very neutral from a fundamental standpoint. A lot of it is how COVID plays out. A lot of it how the economy plays out. A lot of it how production plays out. And all that's very neutral. So the technical read is really where it's at. You're riding a rising 20. You're coming in to resistance. You got a little pinch here. It's one of those wait and see until you get a stronger signal.
Mhm.
Whether that's a breakout or a breakdown, which would be a bearish signal. So, the technical, go 100% on technicals right now on oil.
Yeah. Matt, where you identify resistance on this thing? Is it 40, 50? I mean, where are you seeing it?
You got two levels of resistance. And, like I was talking about on this failed breakout, that's what makes this one a little bit difficult, because you have this increasing support level trend line, which, as long as that increasing support trend line does, you got to be looking at that breakout as a potential trade. You got a little bit of a consolidation pattern. This would be more likely like a cup and handle, where you have a support, then an increase in support with some degree of horizontal resistance, 45-degree angle trend line coming up, putting pressure on that potential breakout. So you got to look at this as a potential breakout. But the reality is that it triggers a little difficult here when you got that $40 mark on an intraday perspective, also a significant whole number. You can see it every time it tests above that 40. Where does it hit into? About 40, 50. So now you got between 40, and if you go all the way back to when you had that failed breakout here, you got that 40 and a half level you can trigger above. Then you have everything up to about 41 and a half. I do like a trigger above 40 and a half as an aggressive trader. As a more conservative trader, you probably want to see this clear out outside the entire channel up there at about 41 and a half. So it just makes it a little bit more of a difficult trigger, which means I think the better approach to do this from a directional perspective is probably a cash flow perspective.
Mm-hmm. Mm-hmm. That would be how I would approach crude right now. I don't have anything on crude. I'm more interested in equities, different commodities, and things like that. Specifically, even like gold. I mean, the longer gold sits up here near 1800, I've been eyeing this breakout. I already own gold. I'm long gold, long delta on gold, but I'm looking to add more. Matt, I know it's been testing up here. You've kind of had some movement back and forth. How are you reading this thing developing up here, holding that 9 very strong for the month? If you think about the month of June, gold's had a great month down here, guys. It started initially going down a little bit, but we've been going up for 2-3 weeks in a row. Matt, what's your read on the price action there?
You know what? In a market week where the market held support, saw price appreciation, the NASDAQ breaking out of all-time highs, showing real good strength, real good strength, and in an economic environment where the labor markets numbers came in with a very, very big positive, and gold doesn't see a reason to sell, I'm taking that as very bullish. But there's very few things on gold that I would not take as very bullish, even drops in price.
Mhm, mhm. No, I think it's very resilient and very bullish in the face of all of this kind of stuff. I mean, markets going up, gold still holding and going up. I think those are definitely great signs. Mark, any thoughts on gold here? You're staying with the same
There's
approach
not a
you've
lot
had?
to add. Either you believe in it or you don't. It really comes down to that.
Find me
There's two
somebody who
things.
doesn't. Maybe
I
that's a
mean,
problem, but find me
there's
somebody
two
who does.
people. Okay, there's two things. Do you believe in it or you don't? And then how do you play it? Those are the two things. So,
Mhm.
those are the only real questions. I see some of the most outlandish gold predictions I've ever seen. Maybe back 10 years ago when we were at the height of the run, people were making these calls. There's some outlandish predictions on where gold can go. And listen, the fundamentals are there. All you need is a spark. It's like V from Vendetta. There's that scene from the movie that, there's that tension building. There's that pent up rage, and all you need is a spark. All you need is a spark, and gold's going to take off.
Mm-hmm. Mm-hmm. Well, and even without really a spark, so to speak, it's even been taken off here for a few weeks. So if you did get some kind of catalyst or spark, I mean, that could be the one thing that could propel it above that resistance zone. Dollar next here, Matt. There's not much in that dollar chart. I don't see hardly anything to real break down. It's kind of moving into a little bit of a short-term consolidation, battling between support and resistance. Kind of feels a little neutral here, Matt. It did hold support now for 2 pivots, and that was a major support back from early March when it was selling off. Any update on the technicals there on the dollar that you're seeing?
No, resistance held this week, support held last week. That really kind of built into some degree of neutrality with the strength. Well, not the strength, but the overall net neutrality against a lot of these major currencies this week. You'll probably see the dollar get, bumped up a little bit on the rankings, but it'll be some degree of neutrality, 45 by 45.
Mm-hmm. Let's talk stocks. Actually, some of the more interesting things outside the jobs data, the things that grabbed my attention here today were a few individual company bits and news that were coming out, including upgrades and whatnot. But let's start with Apple Computer, if you can. There is a concern a little bit. I mean, I think we should have a conversation about it at least for a bit. Thing that I'm seeing with some companies, Apple has closed now 25% of their stores in the U.S. based on some concerns about the risk of the coronavirus uptick and all those kind of things. McDonald's as well, and some same thing. They've paused dine-in service. Mark, when you read stories about Apple Computer closing down some of the stores, does it give you pause or anything about the way you're thinking about the market in general, not just Apple at all? But what's your read on this situation right now?
Well, I mean, we got months of evidence that COVID-19, I don't care if it flares up and we have 100,000 cases a day, companies like Microsoft and Apple seem to actually do better as this store of value. So ironically, Apple can close stores, but the price goes up. I mean, these companies, if they break trend, it is going to be a different issue that breaks trend for them.
Mm-hmm.
It's not going to be COVID-19 unless COVID-19 literally transmute into something that it isn't today. So for companies like Microsoft, I've stopped doing any COVID analysis on my analysis of a company like Microsoft. In fact, is probably a benefit. Something might break trend, always possible, but it's not going to be COVID-19. But all of the COVID-19 news you've seen lately is weighing on stocks like Planet Fitness and Carnival and American Airlines. Had a nice little rally this week, haven't we? Those stocks, those back need butts in the seat, they're not doing as well. They're not doing as well. In fact, they have some pretty ugly charts still. I mean, you even had vaccine news this week, right? And that was probably the most interesting thing to me about this group of companies. When we've had vaccine news in the past, this group of companies, which trades together in some ways, rockets up. Didn't happen this week. And I think that's telling. I think there's a lot of negative sentiment, and these stocks just did not perform as well as the market this week. Nice 4-day rally, nice bounce off support up to resistance. And companies like Planet Fitness and American Airlines, their charts are still pretty ugly. Their starts are still pretty ugly. So I think the COVID news is weighing on that group of companies that desperately need a return to normalcy, whereas other areas of the market just completely unaffected. Market could care less. It might even be a positive for a company like Apple or Microsoft or Google or Facebook or Amazon that's seen as this, hey, I don't know where to put my money. The pandemic is a great unknown. Let me fuel it into safety, this new safety play tech. So that's my take on the effects of COVID-19 right now on different groups of the market.
The frustrating thing about any of these news stories that you come out, you can basically reaffirm whatever view you want to find, quite frankly, Matt. Apple closing 25% of the stores, but it's up near the all-time high, almost a breakout. The market response is a completely different thing than the data or the headlines or testimony about this and that, or some news out of Florida or California. Matt, what's your read on all of this right now? Do you think just trust the chart, focus on what you read? I mean, how are you approaching it mentally?
Yeah, I mean, number one, you got to trust the chart. One of the reasons that the distressed areas of the market did not play well this week was obviously the expansion of the COVID news and the concern that we're seeing with cases rises and so on and so forth. That's having an impact on those types of companies. Like Mark was talking about, they need people. Well, if they don't have people, they're gonna struggle. Airlines, cruise lines, casinos, all of these types of the companies have seen some struggle. But it's not just that expansion of the news. Taking a look at some of these distressed areas of the market. Look at Carnival Cruise. Carnival Cruise a week and a half ago failed bullish retracement, violation of support. Now you're trying to cling on to that last hope of support with a more likely trigger to the downside. When you're looking at American Airlines here, you're looking at a low base type setup with a potential trigger to the downside. When you're looking at MGM here, same type of thing. You're looking at a bearish retracement. And so, you got some really nasty charts that you need to overcome in this distressed area of the market. It's not a very easy market right now to really kind of assess because it is more prone to the negative news that say COVID has. And obviously we've been, seeing an extension there, coming into the week. The expectation was, let's buy into the strength of those potential momentum plays, the breakout plays. Well, what that really is it's those stay-at-home stocks. It's the, blue chip stocks. And, you talk about Apple and you're like, well, Matt, Apple's closing, 25% of its stores, and it's concerning. Why isn't Apple selling? Well, there's a philosophy in the market that, what, Apple, even if something really, really nasty happens, well, guess what, guys? Apple's got hundreds of billions of dollars in cash reserves to handle this. That's what builds a little bit of that safety into Apple. Microsoft here, just an absolute juggernaut, just doesn't want to sell in any capacity. It is market, it's weird to think about, but a storage of value. You talked about that from a liquidity. And what does Microsoft have? Microsoft has hundreds of billions of dollars in cash reserves. When you look at Amazon, the breakout we had yesterday on Amazon out of that resistance level at 2,800. Well, what does Amazon have? They have absolutely everything. Well, when you're looking at these distressed areas of the market, what does American Airlines have? They have another $6 billion in debt they had to go into just to maintain some semblance of a company. And so you just have overall weakness, especially, when you're talking about this from an economic perspective, when you're talking about a cash on hand perspective, when you're talking about a debt perspective. And what else does Apple have? What else does Microsoft have? What else does Amazon have? They have the central bank buying their bonds. So you just have, ultimately, you are seeing the continuation of that theme we've been debating really for 2.5 months now. Those two major areas of the market, the distress plays, i.e. also the value plays out there, versus the growth plays in the blue chip plays. And this week you just saw the continuation of that strength coming in to the blue chips, the big stocks of the week, the Amazons, the Apples, the Microsofts of the world. You saw a little weakness in the distressed areas of the market. So at the end of the day, I think you're just seeing that rotation that we've been talking about quite frequently lately. You saw the rotation happen again this week with, a little bit of weakness in those distressed areas of the market, strength coming into the blue chips and the growth areas of the market.
Yeah, I mean, one of the fascinating things, a couple thoughts here to build off what Matt says. When you look at price action over the last 2.5 months, Microsoft tends, and I follow Microsoft every day, like religiously. Love it, was my favorite company. Don't love the value necessarily, but that's a whole different thing. Companies like Microsoft and these sources of value actually have some of their worst performance when there's actual good news out there about the virus, when there's been these, oh my gosh, we're reopening things, because I think investors then want to go get more aggressive with and bottom feed at the bottom. They take profits, and they have Microsoft has some of its worst performance. It's almost the darker the news on COVID, Microsoft just, it's like, well, I don't know where else to put my money. And I know, like, even me, who's somewhat conservative, like when I want to sell a naked put and I can't think of anything else, I'm like, screw it. I'll just sell one on Microsoft, because if I get put at a lower level, it's freaking Microsoft. So even I buy into that, have started to buy into that store of value theme. It's a fascinating market. This market is, I love this market. It is crazy, complex, but it is very, very interesting.
Well, and you've had that strength and weakness kind of split happening now for some time. It's not just companies like Microsoft and Apple, which are the store of value, but even the high Momo, high flyer names like Tesla. Matt, we bring up Tesla like every day here today, this week. In fact, recently it's been in the news all the time. Tesla came out and Elon actually did deliver, Matt. He said that they delivered 90,000 units during the last quarter versus the 74,000 that they estimated. They also got a price target upgrade at, I believe it was Wedbush, to 1,250. Stock is gapping out here again. I mean, I don't know. There's no way I could chase this up here. I mean, there's just no chance. If you miss a breakout like that, you kind of have to, scratch your head and say, well, I missed that one. I'm going to wait for another one. But it is notable, just the strength, the incredible strength from that breakout, Matt. That 10,000 mark, we're up 20% in 3 days, guys. Matt, how do you approach a Tesla here? Just watch listed? Are you now going to wait for a retracement? What would you do with this one?
Well, you forgot the most important upgrade, and that was the upgrade at the Institution of Justice here a couple of days ago. Also Tapper Trading big shout out to Breakout Frank here on I believe it was Monday of this week on the Twitter on Tapper Trading's Twitter. Oh, Breakout Frank's like, is Tesla ready to break out? Frank might have been front running a little bit, just curiosity there. The breakout was strong, and obviously a couple of days ago, you saw the continuation of that breakout. And then on some positive news today, they delivered 90,650 vehicles in the second quarter. And Ford and GM and Toyota and all those other traditional car companies are like, well, wait. I delivered 5 million. What's the but you don't have Elon breathing as your CEO. That's what you don't have. Wait, hold on. I'll wait. Somebody tell me the CEO of Toyota Motors, who basically Tesla just surpassed as the #1 car company in the world. Don't you Google it. Don't you Google. I see you Google. I know when you're Googling, you shake your head when you're Googling.
I don't know.
That's why you're such a terrible poker player. You have no poker face. You know when you're Googling. Hold on. Somebody tell me the CEO of Ford right now.
I know that guy, but I don't know his name.
Okay, so you don't really know him. Somebody tell me the CEO of General Motors right now.
Oh, that is what's her name? That's Trump and her were going back and forth.
Somebody tell me
exactly.
The CEO of Tesla right now.
Elon, the triumphant.
So that's all you got. That's what the analysis on Tesla starts with. Do they still have Elon Musk? They still have Elon Musk. So at some point, even the haters are going to capitulate to Elon's power. Just bow down, bend knee.
Matt, I don't think you understand how deep the hate of some individuals are out there of Tesla share price. They'll never capitulate.
I'm willing to bet they were shorts that lost a lot of money. They're talking their book. They're talking.
Tesla still has a short interest of about 10%, which is
that short interest is 30% a year ago.
Painful day.
It's crazy.
Listen,
I mean, the same things you can always say.
I said this a long time ago. Elon, stop bitching and moaning against the short sellers. Stop complaining about them. How you beat them is you have price appreciation, and that's how you destroy short sellers. He's done it. Give him credit. Give Elon
this
credit.
Is what I don't get against shorts. And anybody who's been short Tesla since it broke the 20-day moving average clear black in April, I don't care if you hate the company with a mortal passion. I don't care what it is. I don't care if you think it's the stupidest valuation in the world. Where all of these short sellers around the world could get a valuable lesson if they came to tackle trading and watch Technical Analysis 101 or watch the step system. Wait for a signal to short. If you have the hubris to short something without the signal, I don't like your chances long term.
Don't fight the trend. I mean, it's what Matt talked about last night in the webinar. I mean, you trade the trend.
I am telling you right now, there are 10% of the open float on Tesla that is shorting, and every single one of those individuals today are saying this is completely BS. This is nonsense. This is manipulation. This is crazy. This is the most overvalued company in the history of mankind. This is horrible. Look at the data. They only delivered 90,000 cars. Look what any other company delivers. And you know what I'd say? Well, I'm not sure I could disagree with you, but scoreboard, right? I mean, that's all you can do is just scoreboard it. So you know what? They're going to be right, and they're going to go bankrupt being right.
Yeah, you do not fight strong momentum. I don't care if it's Zoom or Fastly or Beyond Meat or whatever. I mean, look at the Beyond Meat. I mean, everybody knew Beyond Meat was going to go down from last year. I mean, it was one of those like universal, everyone agreed, and yet Beyond Meat tore through shorts, including me. My worst trade in the last 5 years was trying to short Beyond Meat against the momentum because I was so positive. Well, I was right, but if I had just waited for a signal, what was a losing trade would have turned into a profitable trade waiting for that signal.
I think short sellers here on Tesla, I'm doing some quick math, by the way. The short sellers on Beyond Meat, they got tore up. These people who fight these momentum trends, they get tear up. They've lost probably 4 or 5 billion this week alone, Matt. 10% of the float is $20 billion worth of short stock, and the stock is up 20% here today. They're getting killed this year. They're just getting destroyed this year. Maybe stubbornness, maybe it's a part of an overall portfolio design. I have no idea, but wow, I can't imagine trying to short a company with that kind of momentum. It doesn't make sense based on the way that I trade personally. And
No,
what,
I mean, even when I was out on Tesla, I never once shorted it. I mean, never once.
yeah, yeah.
Tesla can fly.
Yeah. And if you don't believe in something, you can stay away. You can find a different stock. There's a million stocks that are out there that you can find a premise around that you do believe in. One of the other companies that I firmly believe in that's in the news here today is Spotify. Talk about momentum, talk about these stocks just running and running and running. Spotify, just more news here, guys. I don't know if it's a concerted marketing effort the last 6 weeks. It probably is. But they want to add video to their platform here this year, Matt, to compete with YouTube. And just can you imagine, having streaming video on Spotify and be able to go in there? They're already a content rich platform. They've been signing big names. We've been talking about it for some time. And the chart is just gorgeous. It is a beautiful chart. That is a breakout up here at the top, at least on an intraday perspective. Matt, I would watch video on Spotify. I already love the platform. I think everybody here is a Spotify user, I'm guessing, except Matt, you use Pandora. You still, but it doesn't mean you don't like Spotify, right? It's just you're with what you like. Is that correct?
Oh, I love Spotify as a company. I absolutely love Spotify. I don't use Spotify. By the way, you want to talk about overextended and overvalued companies, Spotify. But I love this company. I love the signings they've had in terms of their content. They're creating a monopoly over their content, and now that they're trying to get into video, that's just kind of a traditional type evolution at that company. I like that news as well. Obviously overvalued here. I mean, you could say that for a lot of these growth companies like Spotify or Zoom or whatever the case might be. But absolutely, Tim, the only reason I don't use Spotify is just I'm an old cranky man who doesn't like new technology. And I embraced Pandora a few years ago. And now that, I'm used to Pandora, my wife, everybody in my life is like, you got to go Spotify. You got to go Spotify. And I'm like, I just don't want to learn how to search.
I get it. Listen, I understand. I mean, I've been over at your house on many Saturdays working on projects or whatever. We're hanging out, doing something on the golf course. You'll turn Pandora on and those channels are great. The music's great. So I get it. You get comfortable with something. I'm just telling you.
I get to go to my David Bowie, station, or I get to go to my Eddie station or my Rolling Stone station or my, I just get to go in there. I don't have to worry about it. And it's just fantastic. And you're like, yeah, but you can customize this on this and this and this. And I'm like, yeah, but I'm good with my old beat up, Ford pickup truck. I'm fine with that. I don't want to evolve. I don't have to evolve in every new technology. I'm okay with some old tech every now and then.
Yeah, I'm with Tim. Spotify has a great product. It's easy to use. I'm a huge fan.
Everybody after you learn it.
It's not that hard to learn, actually.
This is not like a huge learning curve.
There's I can promise you. Search for music, put it in playlist.
There's no learning curve on Pandora. Just type in the type of music, it plays, it picks the songs for you. It's like you're going to a restaurant and you don't have to actually make a decision. They just bring you out some food and you're like, yeah, I'm good with that.
Tim, how long did it take for you to learn how to use Spotify?
I mean, like within a day. Yeah. And first time you install it, it's so intuitive. And by the way,
it's very intuitive. It's a good product.
I bet Marty the Elephant's on Spotify. By the way,
you little elitists act like you love learning new technology. Okay.
That's it. We don't, but that's how easy it is.
You two are the two oldest people I've ever known in the history of mankind.
That's how easy it is.
Elitist.
But that's the beauty of finding a product you love that also is intuitive to where it's not a big pain in the ass to learn, Matt. It's a wonderful product. And the things
I'm going to chime in because I'm actually with Matt. I still use Pandora and I don't even own a Spotify account. I'm with Matt on this one.
You're the oldest young person here. So of course,
I'm gonna lose this one, but let's throw it out to the halftime crew. Pandora or Spotify? Let's hear it.
We'll see. I already say
90. It's 90-10.
Emily's already saying, "Come on, Matt. Come on, Matt. Come Spotify."
Yeah, Emily's been telling me that for 5 years. No, no, I'm not learning new tech. But you know what I will do? Buy Spotify above this breakout channel.
Also, beautiful chart.
100%. Yeah, you gotta like the breakout here. you know, and obviously Spotify will have a conversation on the breakout here on Spotify.
That's a pretty even split. Actually, Pandora's might
Oh
have
my
more
goodness, I got Pandora. Oh, I am shocked. I love the halftime crew. You guys are so amazing.
What is going on here?
I actually do have a YouTube Red account though. I listen to YouTube music.
You know what's going on, Tim? This is the Main Street Americans fighting you elitist out there, forcing us to adopt your own technology.
Oh my goodness, the Spotify and Pandora just got politicized.
Absolutely everybody in society. Well, you elitists, you can't tell us Main Street folks what to think or what to do or how to behave. That's what's going on here. Revolution, baby.
The thing about being right,
I got so many inappropriate political jokes to make right now.
Bring back old technology. I want DVDs up in here from now on. That's what we're doing.
This isn't even really a debate. It doesn't matter what you like or don't like. Quite frankly, Spotify is just better. It is a better quality product. It has more features. It has all kinds of stuff.
Emily, don't you dare.
And they're going to add video.
Dare.
I mean, we might be
question if Cody is stuffing the ballot here. Okay.
No, yeah, do not Cody, accuse me of that.
I thought you were against mail-in voting, Cody.
Spotify, Cody. Just keep doing it. Let's win this one.
Give Spotify a try. Dude,
yeah.
If you tried it for one day and you really tried it, you would never go back. Period. I mean, that's the bottom line. If you actually gave it a shot,
no clue what just happened. I got the support of Main Street. Even if it was the right thing to do, I'm sticking with the team. I will use Pandora until I die at this point.
All right, so you're not going to flip-flop. Fair enough. I'll tell you who has been flip-flopping recently has been Mark Zuckerberg. I do want to talk Facebook here next if we can. He came out all tough, Matt, and saying, in terms of internally to his internal team saying, hey, you know what? These advertisers, they're going to come back. I'm not too worried about it. That is not the image he was putting out there in the public here for the last week. Zuckerberg kind of giving both sides, talking out of both sides of his mouth here. I mean, is there a more distrustworthy CEO right now? I've asked that all week long, but the more any of these stories come in, I just keep shaking my head like, what the hell is this guy thinking? You're not going to be tough on advertisers, Zuck. You would do anything you can to get them back. I don't believe you when you say that to your internal team, and I don't need to hear about your stump speech from a third party. Matt, what's your read on Facebook and this?
I need something in my life. I need to be in the audience when Mark Zuckerberg gives a Leonardo DiCaprio Wolf of Wall Street speech. I need to be in that room. I need to be in that room to see how uninspired everybody gets by Zuckerberg trying to inspire people. Like literally that I need to be in that room when the worst CEO in the history of mankind, because he's not a human being, makes that speech. Facebook, par for the course with Zuck, speaks out of both sides of his mouth. You can't trust anything he says. That's why I love Elon even more. Even when you disagree, Elon's going to speak his truth. Zuckerberg speaks his book. You can never get a true opinion out of him. I could not be further out on any desire to invest in Facebook at this point. I can't stand this company. I can't stand the CEO. And why in the world would you ever invest? And I'm just talking about me. But why in the world would you ever invest in a company that you honestly don't even like, don't see as a benefit to society in any capacity? And again, I'm not trying to pass judgment on anybody. People's going to have their own perspective, and I certainly respect that. But I am completely out on this company. I don't care about any breakouts. I'm not giving Zuckerberg one penny of my money to do anything with it. There's better trends, better companies, better people to invest in.
And if a technician said, hey, I'm going to buy the breakout, I would instantly say, well, why take the news risk when there's easier breakouts? You don't have the same kind of thing here that you do in other areas of the market that are just cleaner. They don't have the same kind of political risk or news risk or day-to-day headline risk out of Zuckerberg or whatever it might be. I see it, I do see the V-shaped rally back into resistance, all that kind of stuff, but I'm a complete stay away personally. There's just too many easier charts and easier companies for me to wrap my head.
Zuck's going to win. Zuck's going to win. He is. He's going to win in life. He's going to win in price. He's going to win in riches. He's going to win. He's going to win. Facebook is a juggernaut. It's behemoth. It's not going away, and the government's never going to regulate it to the point where Facebook's like, hey, listen, I care in any capacity. An investment in Facebook is going to make you a lot of money over the course of your lifetime. I truly do believe that. But I just also believe that investing should have some degree of moral conscience to it. I truly do believe that. Where you put your money speaks volumes. It speaks volumes about you as an individual. It speaks volumes about what you believe in. And there are, even though, I believe Facebook is a wise investment over the long haul, I also think there's a ton of wise investments over the long haul, and you don't have to do them all.
Back here, by the way, I'm watching the chat, and it brings me back to our Spotify conversation real quick. Jonathan says, what got me on Spotify Premium was the Hulu package. That's another point. They get video stuff on their streaming map. They're already in partnerships with companies like Hulu. I can see an entire network developing through that app, because if you think about the app, it's really the tech behind Spotify, not just the names and the people they sign, but scalable as well. I'm with you. I know it's a split vote. I think it was a 50-50 vote. You guys were calling victory. I think we'd have to tally them up. I do respect everybody's opinion on that, but I do know that I'm right with Spotify.
Hey, Matt, I got some old VHS tapes if you want them.
Dude, I would rock out on that. Are you kidding me? Tim used to have a vinyl record player. Loved it.
I love it. Still have it. It's right there. Yeah. I love vinyl records. VHS tapes are not the same as vinyl records, though. There's a different there. I'm not going to get into an entire ponytail, hipster kind of thing. Now. I'm not doing it, but yeah, for sure. One last company here for me, guys, in terms of the news, kind of a light news day, actually, Alaska Airlines. I want to get your take on the airlines because, in my opinion,
Alaska symbol real quick?
ALK.
ALK, that's right.
We're getting news out of the airlines day over day over day over day. And obviously you have a failed pivot there. The entire industry is looking almost similar from a charting perspective. They're moving together. But I keep reading anecdotally better news out of companies like Alaska, Southwest, and so on and so forth, the regional ones, Matt. Alaska got some funding secured today. They feel like they're in a better financial position. They had some positive commentary where I see negative news out of the Americans. Could you see a scenario where you could do kind of like some kind of pair situation where you're looking for shorts in some of the airlines, longs in the other, or most likely are they just going to trend together like they always have?
No, I have no desire. These airlines are correlated right now.
Mm-hmm.
They all run together with similar news. I have no interest in any pairs trade on airlines right now.
Could I sign you up on a breakout above 40 here?
No.
Still wouldn't be interested.
Why would I do that when I could buy Microsoft?
That's a fair point. I mean, that's the market we're in right now. You have such incredible momentum and strength in other areas. I don't know. I still keep a watch list of these distressed areas.
This is a good time to bring it.
I don't think this is the last time the distressed areas have a really big opportunity. I think the distressed areas will have a really big opportunity at some point. Mm-hmm. But I just, for me, with the failed retracement and the violation of support, you need some time for this to really kind of cook before you see some degree of really good opportunity in this area, especially with the data that's coming out on a COVID situation, which has an impact to this area of the market substantially more than other areas of the market. So for me, it's not just because I see the support bounce there on the 50-day moving average, the previous pivot. I'm seeing that. I mean, if you break out a 40, you're violating the other support, the previous resistance level right here that you double topped at 40 there, right here as well. You're reclaiming all the moving averages. So would I fault anybody for doing that? No, I wouldn't. I definitely see that. But for me, this is an area of the market that is going to be really prone to news over the next little bit, whether that's a week or 2 weeks, because it's this area of the market that is really prone to what we're seeing prone to risk with what we're seeing in the COVID-19 data, with what we're seeing in, states, 25 states either shutting down some of their phase, reopening plans, or, coming out of corporations like Apple and Starbucks. So for me, being prone to that news, I'm a little bit more hesitant there. I am. Now, maybe I can be convinced, if we see some positive news coming out of the weekend, if we see some positive news from a COVID situation, coming into next week, maybe I can be convinced in the short term at that point. But as of right now, where this is really the area of the market that is showing some weakness with the strength of the market. So I could see something happening here, as these Microsoft plays, as the Amazon plays, as the Spotify plays, as the Billy plays, as the Wayfair plays, as these stocks that are the momentum of the market, as those breakouts get a little overextended. I definitely could see some rotation, profit taking in those areas. Couple that with that profit coming into the distressed areas. I could definitely see something like that. And I would be a part of something like that, but I got to see that in the data first. Now, I don't need that much time. I mean, that could happen fairly quickly. I mean, we are talking about these types of rotation themes, whereas they were taking weeks and weeks and weeks early in the recovery. They're now taking, a week in terms of rotation. So I am seeing that. I could be signed up for that when I see some positive data and some areas of this market as a whole start to see some positive data. But as of right now, on a Thursday approaching 4th of July weekend, where I'm looking forward to a lot of barbecues, no, I'm not looking at picking up some distressed areas coming into the weekend. Maybe when we start to see positive news coming into sometime degree mid next week.
Mm-hmm. Marky, thoughts?
Hypothetically, but no, I still like the strength of the market right now.
Listen, listen, COVID-19 news is not great, right? I am trading under the premise that I don't know how COVID-19 plays out. I know people have absolute certainty that they know what this virus is one way or another, but this is my money. Like Matt said, there's a billion. If you want to find beat up stocks that don't require people in the seats, there's a lot to choose from. You can find lots and lots of candidates all over the place, or you can go to strength. There's so if you want to bottom feed, you have a lot of stocks that don't require people to come to their facility or their airplane or their cruise ship or whatever it may be. And if you want strength, well, you got plenty of choices there too. I got so many things to do. I don't know how COVID-19 plays out. I don't have the hubris to say that I have a certainty, because I don't know what the governor of California is going to do. I don't know what the different governors around the country are going to do. I don't know how this thing spreads. There's lots of other choices.
If I saw an article today that said the 10 companies that don't have risk to the economy, the 10 highest distressed companies that don't have to have people, I would read that article first. I think you just signed up to write that article.
Well, I got my list of 10.
What are the top 10 companies that
I'll give you one example. All right.
Yeah. No, and I'm dead serious. I would love to see a list like that to evaluate and analyze.
Let's go to Budweiser. Okay. Like beat up stock. I mean, you look at how COVID impacted its price, right? Like beat up. This looks a lot like Alaska Airlines chart, doesn't it? And trading accordingly. It looks a lot like Alaska Airlines chart, because guess what? It's been pretty much trading in tandem with the distressed companies on a one-to-one basis. Yes, one day up a little bit more, one day a little bit more. But when you look at that pattern is the airlines, that pattern is the cruise ships with a little bit maybe more relative strength. Yeah, this week. And so when you analyze Budweiser, and you look at it from a fundamental, like, hey, if I want to play something beat up, blah, blah, blah. Well, where does Budweiser get its revenue streams from? Now, it has been impacted. One of the reasons it's traded with distressed companies is because they do a lot of stadium sales, right? They do a lot of like sales where people are.
Bowling alleys and bars,
but they got a lot of other revenue streams, right? Like compare it on a one-to-one basis for Carnival. Is Budweiser being impacted by COVID-19? Absolutely. But they're still making revenue. They're still making a lot of sales. Whereas cruise ships, they're making zero sales. I don't see any risk of bankruptcy with Budweiser. And I think get that Bullard comment that you shared in the pre-production team, because there'd be a good transition here. But there is risk of bankruptcy. If COVID-19 goes deep, right? We've already seen the bankruptcies, but there is risk of bankruptcy of a lot of companies like an AMC, the movie theaters, even a cruise ship. There is a point where if you can't make money, well, the company is going to throw in the towel. You saw it with Hertz. Hertz was a big freaking name, right? I mean, that's not a small name. With a company like Budweiser that's been trading in tandem, I don't know. For me, it's an easy call. Alaska Airlines or Budweiser. If COVID-19 goes away and everything is good again, both stocks are going to skyrocket. One has bankruptcy risk, one doesn't. I don't know. And who's the Fed buying bonds of? It ain't buying bonds of Alaska Airlines, but it is Anheuser-Busch. So
These are all very fair points. And I would love to see that list of 10 companies that are in the distressed areas that may not, I mean, obviously they've been impacted. Every company in the market's been impacted in some way or the other, but it might not need the butts in the seats to actually be able to survive, even potentially come back and thrive, things like that. Budweiser is an interesting call there, Marky. I'm going to put my mind to this one as well and put that one right on my watch list. And you got to like some of the charting characteristics there, Matt, kind of holding that support zone. It's got a moving average mess in there, but it's a little bit neutral. It needs confirmation if you're a trigger type trader on swing or position, but you got to like some of the stuff in there from that perspective.
There's no technical pattern there right now.
Not yet. No.
This is a big picture fundamental. If I was to buy something cheap betting on a rebound, which would I choose type thing. So
Interesting. Well, last one from me here, guys. Only one more company, and I don't even LMND, Matt. Did you even know this company was going to IPO? I just want to make it just LMND. It's called Lemonade. And Mark, this company LMND, like a lemonade stand.
LMND.
What a clever name for an insurance company, first of all. And even insurance company IPOs are now being bought up aggressively on their IPO date in this market. I just think it's an example of the euphoria and craziness around the IPO market in the last few months. Marky, what kind of insurance do they sell? Do you know?
They're an online insurance company, which, they're online, which means, of course, that means let's jack them up because I don't know, right? Like Allstate doesn't have. Does anyone not pay their insurance online?
Of course we do.
The only time I've been into a physical insurance store is when I go see my brother. That's it.
Yeah.
That's it. And that was to go yank him out of the office. So no, I didn't. No, you don't have to go into a. I have no interest in this company in any capacity.
It's just euphoria. This IPO market, I think one of the things we're going to look back at when we have time to kind of have some perspective here is we're going to look back at the nature of the IPOs during this last 2-3 months and really scratch our heads. And it's going to be really interesting to see how these things actually play themselves out over 3, 6, 9, 12-month periods when we're looking at those charts develop.
Well, I mean, there's going to be a lot of fascinating stories. I mean, pull up Nikola right now, NKLA. Mm-hmm. Not every electric car manufacturer is having a good day on Wall Street. Breaking below the 20-day moving average for the first time. A lot of downside potential there.
You better issue more shares. You better catch that money right now. Come on.
But and it's impossible to trade to the bearish side. Don't even try. The puts are astronomically expensive, and the borrowing cost on a short are really, really expensive. So you can't even take advantage of it. It's the beyond meat situation, practically. But Tim, I know you'll buy if it hits $20, won't you?
Dude, I got it on a watch list. I will look for some kind of.
I probably will play it in the teens as well.
I think it's going to be a momentum hype train. Money. Yeah, I mean,
I have no fundamental knowledge on it all.
Anywhere in the past,
I like having a company to goof around with, right? And I just do. It's a little. What's the word for it?
I know exactly what this is. This is how you feed the beast inside you to make sure that 99 of the 100 companies you look at, you're not fooling around with.
Yeah, I got to have something to give me a little gamble, right? So a little something like I sold a put on AMC movie theaters that expires in 2 weeks, and I got, like 20 cents for it, even though I think AMC is going to go bankrupt, because I was like, I think I can play this and make money on it, even if it does go bankrupt. I got to have something where I get a little bit of gamble so I can have some fun while I'm doing all the boring other stuff I do.
Well, it doesn't have to be Nikola, by the way. I mean, Nikola's technical chart is not looking good at all right now. I know it's been a high trend in the news
teens.
And everything.
If it ever
like
got
that.
in the teens, that's where I would.
Sure. Yeah. I mean, you're thinking if it dropped 30, 40, 50, 60% from here. Well, that's a long shot from here, but we'll see. Guys, that's Stock Talk. Really, quite frankly, There's not a lot going on here today. I mean, the jobs numbers came out. The market's been resolute. The market has shown a lot of resiliency here this week. Matt, you've got the NASDAQ up. Many of the storylines are just strength in communications and tech again. You know, kind of the themes we've been discussing here in Tackle Trading for quite some time, including on our weekend newsletters. We're actually going to be putting together our reports here probably a day early and have them out maybe by tomorrow or maybe Saturday. I'll check with the guys on that. But I know we're meeting as a team here today, Matt, because the markets are closed tomorrow. If we're not aware of that, make sure that you make a note in your own personal whatnot. And we're not going to have a halftime show tomorrow because the markets are closed as well. We're going to be taking the day off of our live programming. But Mark, we're not done there with that. Today, though, you do have a show here in about 45 minutes where you're going to be walking people through the weekly preparation stuff and whatnot. We'll get your thoughts on that here right now.
Yeah, I mean,
How does that go?
We're heading into a 3-day weekend, right? You know, it's like you just want to make sure you have, first of all, I start off going over the commodities, so we break down the commodities, and then we just, answer questions, and just like you want to go into a 3-day weekend where you're not worried about anything, right? Where like you're comfortable with where all you're at. Is there any last second, trade management decisions I have to make? It's just a valuable process that everybody goes through as a trader, right? When you you might call it good at 11 a.m. on a Friday and say, all right, I'm done, go. But, I mean, every trader looks at their portfolio one last time before the weekend just to make sure they're square with everything,
Sure.
So what are you guys doing this weekend?
Well, I mean, first of all, it's a very popular webinar for our pro members. I know I've gotten a lot of feedback on it. People tend to like it. So make sure that people know how to find that. Matt, you're on the events page. If in doubt, if you don't know how to find some of the content we're doing, go to the events page. If you're a pro member, it's all listed there. And then also tonight we have Cash Flow Club, 8:30 p.m. Eastern. And who's teaching that one tonight?
Tyler is teaching it tonight.
The great and powerful coach Tyler Craig, and one of the options wizards, quite frankly, one of the best option traders I've ever known, and a wonderful educator. So make sure that you guys pay attention to those things. My weekend, and I'll just kind of, we'll go into our final thoughts here from everybody. For me, Matt, I'm going to be working around the house. I've got my dogs here. My wife and kids went with grandma and grandpa for a vacation for 3 days, so I got left alone. I'm going to be hanging out. I might go play some golf. I'm still thinking about that. Working and, kind of just hanging out, Mark, enjoying this time of year. There's no doubt about it. Independence Day has always been one of those special holidays for me. I love it. I love the fireworks. I love the celebration of our country. I love the celebration of freedom. There's going to be a little parade here, I'm sure, just in my neighborhood. They do it every year. We've got an active community in that regard. So just kind of celebrating Independence Day. Going to go over and see Matt and, his kids and his family, maybe have a hot dog on Saturday. I know that just those types of things and some work as well. What are you doing, Matt, this weekend?
And Matt, make sure you put together a nice America Pandora playlist.
Dude, I love Pandora when I go to Matt's house. That has never been my thought here. It's not an anti-Pandora thing. It's a pro Spotify opinion, quite frankly. It's just what I believe.
That's how contentious of a country we live in. It's like you can't even like them both. Like, you got to choose.
Got to choose
got
one.
Biden or Trump. Got to choose.
Maddie, final thoughts, market related, personal related, anything. Last halftime show of the week. What's on your mind there, sir?
Honestly, what's on my mind is how we're going to rank the markets, the sectors, go through the markets in terms of identifying some of those potential catalysts from the stocks that are coming up. And when I get that done, I'll think about the weekend.
Yeah.
Matt's all business in the front, Pandora in the back. So
I get
listen, when you got something to do, you get it done.
What are you doing, Cody? What's Hawaii doing? And I love seeing your kid, Cody.
I got little man here with me right now. Got a buddy of mine invited me over. They're doing a barbecue for 4th of July, so I'm going over there. Tomorrow, I'm probably going to finish. I've been building some cornhole boards. The top of one's a Texas flag, and the top of the other one's American flag. So got to get those done by 4th of July so we can play on them. Mm-hmm. That's really about it. Yeah, then just relax, get the Forex report done. This weekend, I'm going to do it over the go-to-bed trade. So I had a student ask a question about that. So I told him I'll do the report this weekend on the go-to-bed trade. So if you want to learn that about Forex, guys, make sure you watch my report this weekend.
I am going to buy a cornhole set because I love watching that on TV. It fascinates me for some reason. So
yeah. I prefer
I'll build you a
horseshoes.
set. They're really simple, or I'll send you the plans.
I'm a
Really
horseshoes
simple build.
man. Cornhole's fine. You got. We can make a debate out of anything, I'm sure. By the way, by the way, I've got a bunch of candidates that we're going to be going through in our scattering report meetings here in just a minute. There's so many great names out there. I'm looking forward to the conversation with the coaches. I'll just give you a peek at a couple here, Matt. Look at Zoom again. We already looked at just one here if we can. There's so many names just like this, these momentum plays. I think we're going to have to discuss and analyze these as coaches, and really we're going to have a hard time picking, quite frankly, because you've got so many strong stocks in the market that have been trending, like the Tesla and all that kind of stuff. So that'll be a good conversation. Guys, thanks for being a part of our show here this week. It's been a very, very fun week, in my opinion. I love the webinar last night. If you haven't seen it yet, make sure you catch that replay. We'll be back with our halftime report live on Monday, 12:30 p.m. Eastern, same station, same time. We do that every day. The markets are live. If you've not done it yet, make sure you click on the subscribe and click the bell button so you know when we do go live on these shows, and we will see everybody then. Have a happy and safe 4th of July weekend, everybody. We're out.